I guess first order of business is to approve the minutes, and hopefully everyone, one individual, had a chance to look at them. Everyone else other than, and if so, there's no
Motion
changes.
to approve.
Motion to approve, I second. All in favor, say
Aye.
we. All right, third item. Moving on to the business of the meeting, Chris, I'll let you present these items.
Yeah, thank you. So earlier this week, I emailed everybody the checks and invoices that were processed since we met last. So you'll see one from FY 25 there at the top to finish that year out, and then all the rest are FY 26. So unless anybody had any questions, like a motion to approve those checks and invoices.
So moved.
Second? Oh. All in favor, say aye.
Aye.
So I guess now I don't have to second. Okay. All right, thank you. All right, Chris, director's report.
Yeah, before I dived into the director's report, I also sent out earlier this week a proposal that came to us from Comms Group to go ahead and allocate about $70,000 for the first half of FY 27 paid media placement. We currently have really advantageous position in these publications, and so we can kind of earmark those funds for FY 27 ahead of time. That allows them some more leverage in contract negotiations to continue that placement. So unless anybody had any questions, I'd like to entertain a motion for that.
So moved. All right, we have a motion and a second. All in favor, say aye.
Aye.
All right. We're moving along great. John, I believe it's your turn.
Oh, sorry.
Oh, no, wait, no, you weren't done? Oh,
No,
sorry.
I did need to go into the director's report. And I'll try to be brief here because I know we have a lot to go over this morning. So since we met last, the treasurer's op-ed in Arkansas Money and Politics came through. And there he kind of spoke to the benefit of saving early in the 529 plan and the employer benefit on that. We also had our Arkansas Travelers Night on July 25th. And in July, we exhibited at the Economics Real Conference. That was hosted by Economics Arkansas. And in August, I made a presentation to the Arkansas Public Employee Retirement System. So I used to just saying APERS. So that went well, again, discussing payroll direct deposit. And we also launched the GROW program. The treasurer and I went down there to Merle Taylor in Jacksonville. There's some more information included.
Is everybody familiar with that?
Okay.
Okay.
Yeah. So that was a great way to start off National College Savings Month. Treasurer and I also earlier this week appeared on The Vine on Channel 11. And early next week, we're also going to be on Good Morning Arkansas. So next couple of months, open enrollment period, we'll start the holiday messaging cycle. And that's when we see a lot of new accounts and contributions, everybody trying to get in towards the end of the year.
Love to figure out a way to show off, grow in a bigger and better way and try to find more, philanthropic. Won't have to be marvelous districts like that.
Right.
Super big deal.
Right.
Yeah, it's a great program that they launched down there. And it's a good, combination of business leaders kind of coming to the table and contributing towards these children's journey. They built it as a framework model, so it can be replicated in other parts across the state. So we're really looking forward to watching that and seeing how it.
Yeah, public-private partnership.
Yeah.
Cool.
Now I'm done, I promise.
Well, no, you're good. You're good. I'm sorry. Trying to move this too quickly. All right. Don, it's your turn.
I've got a few small reports today. First, the budget report, it's only for 2 months, but we're on the expenses are within budget. And it looks like for the year, we're expecting net income to exceed about $55,000. Apologize for my voice. Bank accounts, the two admin accounts as of August 31 were $963,000. That's all the budget report, unless anyone has any questions.
Thank you.
And we're recommending the committee approves two things: the amended and restated rules and regulations. Primary changes are to change the definition of peg-based enrollment, which we don't use anymore, to target enrollment. To clarify that a nonprofit corporation is an eligible participant in the plan, which is part of the GROW program. And to provide that you can roll over to an IRA in accordance with the IRS provisions. Also put in there that the committee has determined that the underlying investments will not include investments in a Chinese company as set forth in the Arkansas statute. These amended rules and regs will need to be reviewed and approved by legislative council. I think Chris, his office is going to take care of that.
Yes, sir.
The other thing we recommend is we slightly change the committee investment policy. One is to change the name. We're still using the gift plan, and to change that to of course, the Brighter Future Direct and the Advisor Plan. And again, in that document, to provide that the underlying investments cannot include any Chinese companies. I think those two things need approval, don't they?
Yes.
All right, thank you.
Motion to approve as presented.
All right, we have a motion?
Second.
Second, all in favor, say aye.
Aye.
Before we move on to the next one, in the GROW plan, I know that we have a statutory change about sharing, if I recall correctly,
Yes.
unique identifiers and student information.
Yeah.
Did that have an emergency clause on it? Is it in action now?
I don't believe it had an emergency clause on it. I believe it would have been effective,
In August.
In August. Yeah.
So it didn't need that to go into effect until August.
Um,
Have you had any pushback on that from parental?
no, because of that opt-out option, that GROW provides, and
I can't think we have any locked out.
no, and, having it as an opt-out structure as opposed to an opt-in.
Right.
A lot of people.
It's a passive
notice.
participation.
Exactly.
Right.
A lot more participation. That actually kind of provides a segue to the data sharing agreement.
Yeah, well, part of the GROW program, and of course, that's been adopted at the Harold Taylor Elementary School in Jacksonville. Part of the GROW program is to include the Clinton School, providing some research capacity. And that school prepared a data sharing agreement, which I've reviewed to make sure it had adequate provisions for security and confidentiality, and I believe it does. So I recommend that it be approved.
So moved. Second.
All right, all in favor, say aye. Aye. All right. All right, John, is that it?
That's it for me.
All right, thank you. Okay, Kimberly, I believe you're up.
Thank you. I think this is my first virtual meeting with everyone. So I won't lie, I probably would prefer to be in Arkansas. It's pouring up here. All that weather, all that rain we've said we needed for months, we're getting it all today. But thanks for having me virtually. What I'm going to do is simply speak to the summary slide. And if anyone has any questions about any of the additional slides, I'm more than happy to answer those for you. So just some standouts from this report is that we're continuing to see positive asset growth, and that's based both on positive net inflows and the market. So it's not just market boosts, it's people are contributing to these accounts. The percentage of accounts in the direct plan for Arkansas residents is increasing as the number of accounts increase. And the average balance is continuing to increase. Also, the highest balances are right before college begins. So I don't think we're seeing any real impact in this plan yet of the K through 12. You're still seeing people saving that money for post high school education. Are there any questions that anyone has for me other than that, based on the report that you reviewed earlier?
Tim, I was gonna ask something. Would you mind whether it's an ad hoc report or you want to start reporting on it regularly? I'm curious to see within the 529 direct plan, how many of our participants have multiple funded options? You know, if they're splitting it between a target enrollment and aggressive or things like that.
So how many have more than one investment?
Correct, yeah. I know on the advisor side, that could be kind of unyielding report, right? So I imagine a lot of the advisors do multiple.
Yeah, I think that there's more adoption of multiple types of investments in an advised plan because that's the, value that they're adding versus just investing money yourself. So typically, it still doesn't end up being a lot. It only ends up being around, 2 on average anyway. And most of the time, an advisor is putting money in, as you said, like a year of enrollment, and then like taking a satellite approach by investing in something else. Especially considering the fact that you can only make 2 investment changes.
Thank you, Kim.
Thank you.
All right, thank you. All right, I believe John Park,
Yeah.
you were up.
So we also have a summary slide, it's the second slide of our deck. Just a quick overview. I think the top line summarizes it. Everybody's watching rates. Obviously, we had a Fed meeting recently, and everybody's watching, the jobs reports as they roll in, as they've been somewhat soft recently. Flows for 529 continue to be strong because market performance tends to be strong. As you know, there's been, decent positive sentiment because of the market strength heading into the Fed cuts as growth slows, but because overall growth has been pretty good, corporate earnings have been pretty solid. Sentiment is still pretty positive. As I mentioned, U.S. stocks surged to new all-time highs. AI is one of the big kind of, factors there. Everybody's talking about how companies are squeezing more efficiency out of the implementation of AI to assist in a lot of different things in terms of adding productivity. Bond yields dipped to 5-month lows. And the US CPI show core inflation is proving to be a little bit sticky. So that's challenging for the Fed because they have that dual mandate of trying to keep rates low as well as, unemployment low or employment high, I should say. So those two things are kind of like working against each other to a certain extent, because if the job market is softening, that could temper inflation a little bit as people, find it harder to find jobs. Companies don't have to hire as much. They don't have to be as competitive with pay. So that will like drive prices down a bit, but that's not necessarily a positive thing for the real economy necessarily. So I think the Fed is trying to kind of like walk that, line between those two different factors, right? So that's what everybody is focusing on. As far as the performance snapshot is concerned, you've seen that international stocks this year, international markets have done pretty well compared to U.S. markets. That for a variety of different reasons. The dollar's been somewhat soft, and a lot of different policy reasons that have led to overall sentiment that maybe U.S. corporate earnings would not be as good as international earnings. So you can see on the left side, most of the 3 stocks that are in the performance snapshot are international, and the 3 on the right, one of them is the Russell 2000, obviously not doing as well as like U.S. real estate and short treasury bonds. As far as what's happening in the plan overall, plan growth has still been really, really good. From the beginning of the year through the end of August, you've seen an 8.2% increase in total assets. Even better in the state of Arkansas, so we're pushing up on 100 million there, so that's a 10% increase. More firms continue to use it, more financial advisors continue to use the plan. We've seen a lot of growth, especially with Edward Jones in terms of the number of financial advisors signing up to distribute the plan. Accounts are growing, and obviously because the market's doing really well, the average account size in the plan is doing really, really well as well. That's about it. Questions?
Yeah. All right, well, thank you.
You're welcome.
It is interesting how the market responds.
Yeah, it certainly is. It's super resilient. It's
Yeah.
Super resilient. And we're in one of those weird market cycles right now where sometimes the negative news, as far as the economy is concerned, is positive news for the market,
Right.
right?
It's
So
the opposite of what,
yeah.
yeah.
So not the best for regular people sometimes, but really good for the stock market.
All right. Thank you. Brian, I believe it's your turn.
Thank you and good morning, board members. I appreciate your time today. So John covered a lot of the economic summary there, so I'll be fairly brief in my review as well. So the Arkansas portfolios are comprised mainly of index investments and performed as expected given the market conditions that John mentioned. Those portfolios with a higher allocation to equities, such as the aggressive growth and the target enrollment 2042, 2043 portfolios, had positive 3-month returns through July, 11.51% and 10.92% respectively. A strong performance in international equity provided diversification benefits within those multi-asset portfolios. And all portfolios in the plan were positive for the 1 year. And then a little bit more information there. So the Vanguard's 2025 outlook anticipates core inflation to remain above 2.5% and policy rates to potentially decrease to roughly 4% by year end, with inflation risks and unemployment around 4.5%. So happy to answer any questions or if there are any other thoughts to address here.
All right, thank you. Any questions? All right,
Thank you.
thank you. All right, moving right along, new business. Chris, I think you have something.
Yes, so since our last meeting, discussing Act 937, we've had several follow-up conversations with both Vanguard and iShares, trying to get a broader understanding of the pricing impact and honing in on what exactly portfolios we'd be swapping out to be in compliance with Act 937. So wanted to ask Kim to kind of steer it from here and kind of show us exactly what those changes are going to look like.
Thank you, Chris. So I am going to give the information on what changes are going to be made to both plans. I have my partners here from BlackRock and Vanguard, John, Ryan, and Christy, so that any questions you might have about the investments, they can assist with those as well. So starting with the Brighter Future Direct Plan, the Vanguard funds. So if you look to the right, you can see that within the target enrollment, the multi-asset portfolio, as well as the income portfolio, how these changes will impact each of those. So the total international stock index will exchange into the Vanguard developed markets. And the soon to be launched emerging markets ex-China ETF. So, something to keep in mind, that is something that is going to be a new fund for Vanguard, and that is going to be launched in the very near future. The total international bond index will exchange into the total bond market index, which is an existing product in the plan. The performance is, this is a clickable link on what Chris sent us if anyone wanted to be able to look at the performance of either the developed market index or the total bond market index. We are proposing 12/5 for the date for being able to make these changes. So that is what the intent is for both plans, being able to make these changes on 12/5, where we'll also have a roll down for the target enrollment plans. It is pending, though, for the direct plan, the launch of the ex-China ETF. As I said, we're expecting that very soon, but that the SEC allowing us to move forward with that is what is going to be necessary. But we will do it at the earliest possible date if December 5th is not going to be available anymore based on timing. So these changes will reduce the China exposure to less than 1% as of, I have 8/31/2025 here, but as of the date of change, so I apologize for that. Based on the pricing of the Brighter Future Direct Plan, the end user will not see an impact. There's an all-in cost there, so changing the underlying funds does not change the fee to the end user. Before I move on to what we're going to be doing with the advisor plan with BlackRock, I just wanted to open it up to questions.
Just a couple of questions on the timeline. December 5th, is that the day you expect all of the transitions will be complete, or is that when the transitions begin and they'll complete at some later day?
That is the date that we're planning on making the changes. Christy, please speak up if there's anything different, but no, they're expected to be completed.
Okay.
That's correct. That would be the trade date of the project. So all of the transaction activity would be booked at kind of close of business into that date. So on the next business day, the plan will reflect all of the changes.
Okay. And the reason I was asking is I understand the legislation as of December 31, basically take a snapshot of the portfolio, and then we have to make a report to the legislature of what is in there and then potentially divest after that. If I'm understanding right, then by the time we take that snapshot on December 31, we should be below the 1% mark. Okay.
Thanks. Any other questions on the Vanguard Fund? All right. Moving on to the Brighter Future Advisor Plan, which are the BlackRock fund changes. So highlighted on the chart to the right are the funds that currently exist within the plan that are above that 1% threshold that we're looking to correct for. All of the funds we'll be changing to are already BlackRock funds. So there's no SEC wait or approval time. So the December 5th timeline for this will definitely be workable. So just as an overview, in the target enrollment and static portfolios, as well as the standalone options, the iShares Core MSCI Emerging Markets ETF and the iShares MSCI Emerging Markets Minimum Volatility ETF is going to be replaced by the iShares MSCI Emerging Markets ex-China ETF. Like I said, it's already an existing BlackRock product. The iShares Core MSCI Total International Stock ETF will be removed, and the assets will be merged into the iShares Core MSCI EAFE ETF. These moves will reduce the China exposure in all the portfolios to less than that 1% threshold. The only place where we're going to see a difference for the end user is the emerging markets ETF is 11 basis points lower than the ex-China ETF it's going to be merging into. So within the portfolios, the highest change someone will see is 2 cents per $100 annually. So it's not a significant change that will be seen for end users. John Park, please feel free to add any context.
No, that pretty much sums it up.
Okay. Does anyone have any questions on the changes that are going to be made to the Brighter Future Advisor Plan?
Crickets, all right. Well,
I like to think it's because the summaries are so fantastic. But anyone is more than welcome to ask questions later too, if the need arises.
all right, thank you.
So with there being no other questions, I'd just like to ask for a motion to finalize the approval of the portfolio changes as presented to comply with Act 937.
Yep,
So moved.
all right, got a motion?
Second.
Second, all in favor, say aye.
Aye.
Aye. All right, motion carries. Okay. Anything else? Commissioners?
Very efficient meeting, sir.
All right, motion to adjourn, anyone?
So moved. Second.
All right, thank y'all.
Thank y'all. Have a great day.
Thank you.
See you, everyone. Enjoy your day.
Yes. Yeah.
Anyway, sir, long time.